Money controls the world, but the biggest wealth secrets stay hidden. Welcome to Bold Mysterious, where hidden financial truths become powerful wealth lessons. Have you ever noticed something strange? When the economy crashes, ordinary people panic. News channels scream about losses. People worry about jobs. Businesses shut down. But at the exact same time, some of the richest people in the world become even richer. Why? Why do billionaires seem calm when everyone else is afraid? And why have some of history's greatest fortunes been built during economic disasters? Today, we're uncovering a secret that wealthy investors have understood for decades, a secret hidden behind fear, panic, and market crashes. By the end of this video, you'll understand why rich people don't fear recessions. They prepare for them. Imagine waking up tomorrow and seeing headlines everywhere. Stock market crashes, millions lost, economic recession begins. What would most people do? They would panic. Many would immediately sell investments. Some would stop spending. Others would believe the economy is permanently broken. This reaction is completely natural. Humans are wired to avoid danger. But here's the problem. Financial markets are driven by emotions, and when fear becomes widespread, prices often fall much lower than their true value. This is where wealthy investors begin paying attention, because while everyone else sees disaster, they see discounts, and history proves it. The rich understand one simple principle: money is made when assets are bought, not when they are sold. Think about it. If a luxury house worth $500,000 suddenly drops to $350,000 because the economy is struggling, has the house changed? No. The building is still there, the land is still there, its long-term value may still exist. The only thing that changed is the price. During recessions, fear pushes prices down, and wealthy investors often use this moment to buy quality assets at a discount. It's similar to a giant sale, except instead of clothes or electronics, the products on sale are businesses, stocks, real estate, and investments. Most people run away from these opportunities. The rich move toward them. One of the greatest investors in history, Warren Buffett, has a famous quote: "Be fearful when others are greedy, and greedy when others are fearful." Think about that. When everyone is excited and prices are high, Buffett becomes cautious. But when panic spreads and prices collapse, he becomes interested. Why? Because panic often creates bargains. During major economic downturns, Buffett has repeatedly invested billions into strong companies while others were selling. While the crowd focused on short-term fear, he focused on long-term value. And over time, that strategy helped build one of the largest fortunes in history. But Buffett isn't the only example. Let's travel back to 2008. The world was experiencing one of the worst financial crises in modern history. Banks were collapsing, housing markets crashed, millions lost jobs. Fear was everywhere. Many investors sold everything, but some wealthy investors saw something different. They noticed that strong companies were suddenly trading at extremely low prices. Over the following years, markets recovered, and many assets that had been sold in panic doubled, tripled, or even increased far more in value. Those who bought quality assets during the crisis often saw massive gains later. The people who reacted emotionally suffered. The people who stayed rational benefited, and this pattern has appeared again and again throughout history. Now let's look at a more recent example. In early 2020, the world seemed to stop. Businesses closed, flights were canceled, cities went into lockdown, financial markets plunged. Many people believed the global economy was heading toward disaster. Fear dominated every headline, yet something surprising happened. While panic spread, many wealthy investors started buying. They understood something important: the crisis would eventually end. Human innovation would continue. Businesses would adapt, and economies would recover. Within the following years, many markets rebounded dramatically. The lesson: the biggest opportunities often appear when confidence disappears. If recessions create opportunities, why don't most people benefit? Because investing isn't just about money, it's about psychology. When prices are rising, everyone wants to buy. When prices are falling, everyone wants to sell. This emotional cycle traps millions of people. The wealthy train themselves to think differently. Instead of asking, "What if everything gets worse?" they ask, "What will this asset be worth in 5 or 10 years?" That shift in thinking changes everything, because fortunes are often built by focusing on the future, while everyone else is focused on today's fear. Now, this doesn't mean every recession automatically makes people rich, and it doesn't mean every investment is a good one, but history repeatedly shows a powerful pattern. Economic downturns create opportunities that rarely exist during boom times. The rich understand that markets move in cycles. Growth, decline, recovery, and growth again. While most people see only the decline, the wealthy are already preparing for the recovery. That's why many rich people don't view recessions as the end of opportunity. They view them as the beginning. The next time you hear headlines about economic panic, ask yourself a question. Are you seeing what everyone else sees, or are you seeing what the wealthy see? Because hidden behind every recession may be an opportunity that most people never notice. The biggest fortunes in history weren't built by following the crowd. They were built by understanding what the crowd was missing. If you enjoyed this video, subscribe to Bold Mysteries and turn on notifications, because the next financial secret might completely change the way you think about money. And remember, sometimes the greatest opportunities arrive disguised as fear.